silver, Bitcoin, and Ethereum, Robinhood, and the continuation of risk-on sentiment. Stay tuned for Breaking Bitcoin.
I'm Samson Mo from Blockstream, and you're watching Breaking Bitcoin.
Welcome back to Breaking Bitcoin. This is your daily source for everything cryptocurrency trading and investing. I'm your host, Justin Wise, lead analyst at CrackingCrypotcurrency.com. Hopefully, everyone watching today is doing fantastic wherever they happen to be and however they happen to be tuning in to the show. We've got a good show for you guys, a lot to talk about. Before we begin, Cracking Cryptocurrency is very proud to host the fastest growing online community of traders and investors. To stay up to date and make sure, make sure to join our Discord server at discord.crackingcryptocurrency.com. All right, so we're going to be looking at a lot of charts today. We're going to be looking at Bitcoin. We're going to be looking at Ethereum, although I'm less excited about that particular chart. But the setups in Bitcoin are interesting. I think it's important to revisit our previous bias, to revisit our previous setups, and to look at risk to reward ratios and the proper way to establish trades, regardless of one's directional bias, because there certainly are cases for either side. You're always going to get this in consolidation. So we'll go over both of that so that at the very least, and we'll also go over hedging methods as well, so that at the very least, if you're going to be acting on your directional bias, you are doing it in a proper way, which is the definition of intelligent trading. The first thing that I want to talk about today before we get into the charts is a little bit about emotional discipline. And we're going to touch on this in today's community mentoring session for the premium subscribers. Every Wednesday, we host a 2-hour session of mentorship where we generally present one or two main topics. Today's main topic, and the formula that I like, and we've had a lot of free-form mentoring sessions as well, but the formula that I like is introducing a risk management or emotional discipline or trade psychology or investment psychology concept, and talking about my experiences with that and best practices and how that has changed and how I think traders can apply these concepts to their trading or to their strategies, and then going over a technical analysis tutorial. So today's community mentoring session is going to focus what I'm about to talk about in much more depth, and then also we're going to be covering today's technical analysis topic is going to be how to trade or how to short-term trade very bullish markets, essentially how to buy pullbacks in a bull market, how to identify those, how to establish those, and how to improve your hit rate and chances of success when trading that strategy. And also, like, what markets should you be applying this to? Do you just do it willy-nilly? There's a good identification method, and that really saves a whole lot of the problems, because that is one of our greatest strengths at Cracking Cryptocurrency, at least with the Pathways to Profit trading strategy or trading methodology, which is identification of the correct markets to trade and conditions in which to trade, which saves so much of the, that's the majority of the battle right there. So anyways, the topic that I want to talk about is when you're planning a trade out, often you need to be patient. Often you're going to enter into a position, and that position or that direction is against the sentiment of the general marketplace, against your friends, against the Discord server that you're in, against the Reddit forum that you're posting on, against what 4chan says, wherever you happen to be kind of congregating and communicating with your knowledge. For most of you, I know it's going to be Discord and the Cracking Cryptocurrency Discord, which is good. There's a lot of good information in there. And whenever you're putting on positions, sometimes you're going to be wrong and sometimes you're going to be right, obviously. The asymmetric distribution of the rewards of being right versus the downside or loss of being wrong is what defines a profitable trader or investor. Okay. Now, the problem here is when it comes to psychology, when you execute the trade, when the trade is completed. So for example, say 2 months ago, you called long on silver, very, very bullish on silver. Well, on days like today, individuals will come out of the woodwork to clap you on the back and tell you what a smart trader you are, how great your technical analysis is, how much you nailed it, how much money they made off your call. And this is something that commonly happens to me as a public personality and as an individual that runs a trading group. So obviously we provide trading signals and we talk about trade setups and we do mentoring. So we do all of these things. And when I get it right, for example, and just speaking of myself, when I get it right, individuals are not hesitant with their congratulations. And you'll see it in the YouTube comments, you'll see it in the Discord server. But, and this is going to be the same for you if you provide kind of the public results of your trading. But when you're planning that trade out, when you're in the planning phase and the trade hasn't culminated yet, hasn't gone in your favor, hasn't gone against your favor, you may not even be in position, you're just scoping out your limit entries. Very few, almost never, will individuals confirm your bias in a satisfactory way, in a way that makes you feel better about your trade setup. And this is unfortunate because humans are social creatures and we seek validation all of the time. I mean, the majority of the things that we do as social creatures is seek validation from our peers, from our loved ones, from those we respect, from those we disrespect. And this is what makes trading and being a man of virtue or being a person of virtue and sticking to your guns very difficult, because those concepts that actually improve your status, improve your life, make you a better person, give you better rewards because you're following through on your plans, is kind of counterintuitive to how your brain is wired. Your brain is wired to go along with the flow of the crowd, to cause kind of the least amount of disturbance possible, and to seek the most validation that you possibly can. And this is what makes trading, and as I said, sticking to your guns hard, right? Because it's easy to go with the crowd. So when a trade, so say you enter into a position and a trade doesn't perform in your favor or the way you expect, individuals tend to cut and run very, very quickly and go with the crowd, who are generally trading against them, right? And that's unfortunate, because that means that you're being, you're kind of disrespecting your former self. You're disrespecting your former analysis. It takes longer than a day. It takes longer than a week sometimes. Sometimes it takes longer than that to invalidate a kind of fundamental and long-term positional trade or swing position. So tools for success here. This is a difficult concept, but being aware of the concept is half of the battle. So just be aware of your own psychology when you're communicating to other individuals about your own trades, and always focus on being true to yourself when it comes to the actions that you take. And that means putting in quality analysis and only entering the positions that you have the confidence in to hold, regardless of what the market or your friends or your peers think. And that confidence is going to come either through the quality of your, or the quantity of your statistical analysis of historical and live results, or from your fundamental conviction in the trade, which is a particular sentiment-based way to trade. Now, mastering this is a great challenge for traders. Few understand this, but the individuals who do master this concept generally become the best in the business. So that's kind of what I wanted. That's what I wanted to talk about to precede today's show. Premium updates. The online trading academy is obviously live. We'll look at it here in just a second. If you guys navigate to the homepage, you will see in the menu that you can click on the academy and see it. You can see the 2 courses currently that we have online. The Pathways to Profit flagship course is currently available to premium subscribers. We had some individuals that didn't get immediate access to it when we launched it. Ended up being a long story, but we had to fix things that we shouldn't have fixed. So this is typically what we do. We attempt to use the tools that are currently available, and often we find that they are lacking, and we improve on them, and then they're our own. So that is good to go. I have loved the initial feedback from members utilizing the academy, and I look forward to pushing more courses on there. So the premium member onboarding is the next course that will be live. This will be the recommended onboarding procedure for new premium members. The next courses that will be uploaded in due time are going to be risk management, trade psychology, investment psychology, technical analysis, discretionary trading, and strategy building in Pine. So a subscription to the Premium Trading Group will give you access to the Academy and all of those courses with Premium Plus or above subscription tiers. The Members Come Home campaign. We've had a good influx of returning premium members. It really warms my heart to have a lot of these individuals back in the community. My messages are long in the tooth, so I apologize if I haven't had the opportunity to communicate personally with all of the individuals that have rejoined the group, but it's great to have you guys back. And we've had a lot more individuals kind of communicate with us and following through on that discount offer that went out in the email. So very happy to have those individuals back in the group and looking forward to today's community mentoring session. So make sure to check your email and your Google Calendar for that invite, because it's going to be unique. Headline that we missed yesterday. So Judy Shelton was approved, was appointed to the Fed board. We missed this, right? Now, for those of you who don't know, Judy Shelton is a hard money advocate, and she's spoken quite positively about crypto and, of course, gold. So I look at the practical, realistic, positive things that can come from this. Do I think that our monetary system is going to change fundamentally? No, I don't. Just like I was having a conversation the other evening about kind of wealth inequality and the issues of poverty and homelessness in society, and how realistically that's not going to be solved in any kind of comprehensive way with the working order that we currently have, with the working society. It's far more likely that this version of society, or this version of empire state, as I've talked about, we are in late stage empire behavior, late stage empire action, collapses, and then something new takes hold. And this is generally how it goes, right? You can study any empire, any large civilization, any large social gathering or government structure, societal structure. And as it reaches the end phase of its empire status, the rampant poverty, wealth inequality, abuse of the legal system, just blatant violations of the legal system, a lot of theatrics and show, particularly in public politics, more stringent, less thought out, less well-planned foreign and domestic policy. All of these things just snowball. And it gets to the point where the emperor is forced to give bread and sport. And that's certainly what we have right now with the stimulus checks that are going out, because what the Fed is doing is directly causing this increase of wealth inequality not being necessarily an issue in and of itself, but when the distribution of funds in society, when the monetary flow is unable, just physically unable to constructively get to the lower echelons of society, which it needs to prevent civil unrest and civil disobedience, that's not happening. So we are in this unfortunate phase where civil disobedience and civil unrest will continue to get worse and continue forward. And of course, COVID gives our current situation kind of the perfect limelight to do that, the green light to do so. There's all the justification in the world for society to go crazy. But that will get worse. And the distribution of funds to these sectors of society is not the optimum solution. It's not a fix. It's not going to fix the problem, but it's what they're forced to do with where they're at. So in our main story today, we're going to be talking about Robinhood. So the team did a lot of research into Robinhood's UK launch and obviously the brokerage in general. And again, Robinhood is a broker that I've recommended in the past. It's very popular among new traders. It's very popular among millennials. It's very easy to just whip open the app and do your trading. Options have become very popular. And again, novice traders are going to initially have success in a bull market until the bull market turns and they're in consolidation, and then they generally get fleeced. But very interesting, when you look at fee structures and payments and the way that Robinhood utilizers are really getting taken advantage of. And this is a direct result of something that is free and ubiquitous, right? So remember, there's really nothing in life that's free. You pay for it one way or the other. So the idea that Facebook is free, right? It's not free. Facebook is not free. You can utilize Facebook with no upfront cost to yourself, but what you give in return is they own the rights to everything that you upload to that platform, and they monetize the hell out of it. You, by taking advantage of a free offer, are directly contributing to the monetization of a corporation and a group or a group of developers and entities that may or may not be have your best digital interest, your best privacy interest, your best political interest, your best security interests, certainly. So there's really no such thing as free. If a platform is free, it is going to monetize you one way or the other. So it's far better, in my opinion, to pay for the cost of something up front to get a quality platform or app or structure or whatever we're talking about, because then the kind of the profit model of the company, and that the profit model does not need to rely on monetizing your personal data and twisting the lines and blurring the lines. So obviously this is a specific issue with social media, but it applies to many, many, many things. All right, with that being said, let's get over into the live scene so we can look at the charts, give a comment shout out, and start breaking down today's technical analysis. Thank you guys for joining me. If you enjoy the content, make sure to subscribe to this channel on YouTube, give us a follow or sub over there on Twitch and DLive, and likes are always appreciated because we do work hard for this content. Let's get going, guys. All right, here we are, and blinded by the light. Good to have you guys with me on this Thursday afternoon. It's already 12:17 p.m. here in the CST. I'm going to be looking at a lot. So the first thing that I want to do is, of course, give a shout out. I love it when you guys leave comments on the YouTube videos. And Crypto Caveman, a long time, again, I know a long time viewer, good friend. Thank you so much for this continued support. And I hope the t-shirt is fitting nicely, my friend. He says here, the subs will soon be over 9,000, and let's see here. I don't know if I have it ready. I don't think I have it ready, but I can get it ready. Just 1 second. Hopefully this works.
It's over 9,000.
So yes, thank you for pointing that out. We are very, very close to 9,000 subs here on YouTube. I do believe 8.93 thousand. So yeah, it should, I mean, you know, more people hit that sub button, the faster we get there. But we'll do something special when we cross 9,000. Do a little bit of giveaway. Probably give away some BTC. We haven't done that in a while, so that sounds good. So thank you guys for the continued comments. I have pinned that. And I want to look at trade of the day. So obviously, as part of the premium trading group, we put out premium signals as part of our premium signal service and recommend trades. So let's look at the big trades and trades of the day for the premium trading group. Those following along are certainly going to be the Forex trades. So we have multiple categories of signals that we recommend. For those of you who don't know, cryptocurrency signals, Forex signals, ETF signals, and CFD signals. We're going to be adding to that. Really, expanding and diversifying the crypto signals is going to be good. But the Forex trades that the group has put on that I have recommended because I'm the one that generates and signals the Forex trades have performed very well. So the first one we're going to look at is the Euro Yen. So the Euro Yen has just been in a very good uptrend right here. Beautiful continuation and follow through of this uptrend following a kind of its initial uptrend here. Had the sell off, a little bit of consolidation, and then we caught the continuation signal with my PTP trading strategy that I apply to Forex. So we entered this on the 14th. So this candle right here, a good consolidation, a little bit of initial pullback, not throwback into the consolidation area, and then just beautiful continuation. So we've already hit TP1 on this trade. And at the conclusion of today's daily candle, we're going to be in trailing stop territory. So we're going to be setting a trailing stop on this and just letting the trade play out as it would. The other trade that was recommended for the premium members is the Aussie Kiwi. This is a really beautiful trade because we entered this on the 20th of July. Just let me confirm that. Yeah, we entered this on the 20th of July at the daily close. And tilt this down just a little bit. There we go. We entered the Aussie Kiwi on the 20th of July. The Australian currency pair being very strong in the market. And just on the next day, we get a nice Jericho candle to the upside, immediately hitting our first take profit, which makes this a no-loss trade. We've already made good money on this trade, and we'll just allow this to continue to run. I don't see any reason why it would not, unless we just get rejected from this range and pushed back at this current point in time. Doesn't really matter because we've won no matter what. Euro Swissy progressing along nicely, probably the weakest performer, but still good of the trades. And the pound yen. Who can complain about the pound yen? This was one that we signaled yesterday at daily close, taking the continuation signal again out of the breakout, utilizing my PTP system and doing well, up about 0.5%, which for Forex is a good daily game. Forex trades performing quite nicely. Let's move into today's technical analysis. We'll look at Bitcoin first. A few charts that I want to look at. My overall sentiment is still bearish. I think the risk to reward setups that are presented by Bitcoin's chart, and we'll look at a few examples, are going to be to the downside. But I am not going to fault anybody for looking for bullish trades in this area, kind of considering this a breakout. This is just another lower high. We don't have any significant break of market structure. We don't have a significant we don't have follow through, right? Which is the biggest thing. And you're probably going to hear this from a lot of individuals. And you want to be careful in general who you take your trading advice from. But we don't want to be jumping at shadows, and jumping at shadows happens so often in a range when you're in a trading range that is tightening, counter movement trading, right? So reversion to the mean or range trading strategies are going to perform well until the one time that they don't, and that's on the actual breakout. And at that point, you just flip directions, you take that L, and you proceed with the trade, or you wait for a pullback. Multiple different ways to do it. We cover all of that in PTP, the proper methodology, the proper way of how to do that. But there are two setups that I had talked about, several setups that I talked about for Bitcoin. One being the Tenkan Kijun cross under signal from the Ichimoku Cloud trading system. We did get that trading signal on the BTC spot chart back on the 10th of July. With the crypto settings for Ichimoku, you guys can utilize this indicator. It's free and publicly available on TradingView. You can go to tv.crackingcryptocurrency.com to apply it to your chart, or just search the indicator widget for cracking space, and all of our indicators pop up. Ichimoku is free and publicly available to use. The proper way to trade a Tenkan Kijun cross under is to, well, there are this is an interesting TK signal. We are above the cloud. I generally, one can say that we are not going to take bearish signals, that's going to be a sell signal, like exiting one's long position when one is above the cloud. This particular area, because of the kind of parabolic move we had to the upside, the cloud is extremely wide. We have the lower boundary of the cloud where we're currently at, all the way down at 7,000 and over to 8,139. Nobody wants to wait until 8,139 to take shorts, weekly shorts particularly. But again, that is valid, right? A lot of individuals, there is an interesting strategy, for example, to be said about Litecoin and XRP, where they have not performed very well. And so individuals are looking to short sell them because they're in bearish trends and they haven't really shown signs of reversal. I would be a little cautious about that. That makes sense, but you have to look at the kind of fundamentals of the market or the asset class in which you're trading, which is things are pumping ridiculously off of the bottom. And that is what cryptocurrency does. So not to dwell on this too much, but again, the Tenkan Kijun cross under signal is still valid. Price tends to fall through green support clouds, giving us an initial target for this trade of around the $8,600 area. And should that break all the way down to 7,000 with an initial stop off at 8,139, 8,200, 8,000, depending on where the Senku Spawn B is going to be at that point in time. And this trade isn't invalidated until we get a daily close above the Kijun, which is still at 95.09. And it's interesting to note when the Kijun stays flat, because it is a Donchian algorithm, it's a Donchian smoothing system, and it's not going to change unless there's a new high or low, right? And eventually your look back period, your N is going to get closer to you, so that'll modify your high and low and it'll change that way. But you need to actually have breaks of market structure, movements of market structure, new highs, new lows, significant points in the market, significant pivot points, and areas on which to base your trade to be looking at that. Otherwise, it's still consolidating with a bearish downwards bias. So to juxtapose that, let's look at the CME chart. So that's my perspective and how I'm currently trading. But let's look at the CME chart. If we look at the CME chart, we do see a little bit of a different picture. So it just depends on how you want to trade this. One caveats that I'm going to throw out right now: we don't have significant bottoming signals, and I kind of feel bad for saying that because obviously, why would we? We have not had a significant break to the downside, and we're not talking about a kind of reactionary sell-off to the downside. We're talking about sideways consolidation here on BTC. But looking at the CME futures chart, we can see how, just how much cleaner this chart is, particularly for the chart patternists out there, as opposed to the spot chart. That's going to be removing the weekend data and just giving us some cleaner bars and charts to work with. So this is just a very, very simple, sideways consolidation, kind of tightening range. Individuals are going to call this it's certainly not a flag. A pennant is going to be justified. One can call this a bull pennant. And looking for breakout once one crosses that boundary. And you can certainly take a measured move. We'll get into that if and when that happens. We're not going to chart that out today. But what I want to talk about here with this chart is that there are a couple things here that would suggest a bullish trade is possible and on the table. Let's look at two of them, right? There are two that I really see. And the risk to reward isn't too terrible. Not the direction I'm going to be trading. But as I said, I want to cover this with you so that if you guys are going to be acting on your bullish sentiment, that you are doing so appropriately and that you understand kind of what framework you're operating in. All right, so if we look at this pattern, if we look at the symmetrical pattern and look at where we are in the range, we are at the lower area of the range. If we look at a momentum oscillator like ISISpot, we are relatively close to the oversold territory, and we have crossed back over the signal line. Okay, so that is going to be bullish impetus. If we look at something like CM Williams VIX Fix, there are no bottoming signals here, and that's because of the lack of momentum. Again, so we are at the bottom of this range. So a trade to the upside of the range would just be range trading. That's totally fine. That's valid in this scenario. That'd be a movement up to about 9,800, which would invalidate the Kijun cross under should that happen. And that can get you in kind of a sticky situation. So you really need to decide which chart you're going to be trading and stick with it, right? So for those of you who are following the CME chart quite closely and basing your TA or basing your trade setups on this, that's a setup that's valid there. And if we should break to the upside of the symmetrical formation, we do have a measured movement up between 11,235 and 12,120, always kind of targeting the middle, or actually those two areas as good 50-50 price target distributions for your position size. Downside break is going to be putting us, and I was a little bit more laissez-faire with this one. I was quite generous with my zone here, between 7,400 really and 6,000, which is going to be that fair market value range. If we go back to the VP VR chart, if we look at the visible range in my volume profile analysis, which you guys can see if you guys looked at that analysis, at where Bitcoin is. So dropping back down into the fair market value range is fine. That's a good buy. It's a good opportunity for Bitcoin. If we drop lower, it's a good buy. It's a good opportunity for Bitcoin. But certainly knowing where price is likely to go on certain breaks is important, but we haven't seen any significant breaks. There's really, individuals are very, very excited about which way the market's going to go. We don't have enough data yet. The thing has not happened yet. And when it happens, you can trade based on your conviction. Right now, trades I would recommend at low risk, 1% or lower for total risk, and with relatively generous stops, because the fake outery here is significant, right? All right, so we talked about this symmetrical consolidation and breakdown. The other things that I want to point out is the same thing that I've been talking about for a while, right? Which is this, just hanging around support, falling volume, falling volatility, and it's when you are, if you're consolidating at support, you tend to just fall right through it, especially on low volume and low volatility. If you're consolidating at resistance, you tend to break to the upside. So I do think that a break to the downside here still looks more technically viable. Roadmap chart right here. We do have another potential trade setup here based on this kind of descending channel. Not a whole lot of white space. Two tests to the downside, 3 tests to the upside, and then this break. So this would be a pretty classic BPC break pullback continuation. Keep in mind, this is to a diagonal chart pattern. I do not like those. Those do not tend to have a high probability of success. For me anyways, in my experience, I like horizontal patterns or horizontal lines. My favorite patterns to trade are going to be rectangle tops, rectangle bottoms, and triangles in bull markets, and sometimes bear markets, but more often than not, I have more success with triangles and things of that nature in bullish markets. So this would be a break. If one were to enter based on this BPC, then one could take a trade up to 99.79 would be a good measure target up to local resistance. You could be more conservative than that. And then invalidation with a stop loss below this local swing low range. Don't need to go all the way down to the bottom of this candle. This really was where the market bottom liquidity was. And then longs got shaken out on this wick to the downside. So this is a liquidity raid. And so this area has already been swept is the terminology here. And so stop losses here at 90.94, or let's just say 9100 are going to be relatively safe, because if price comes down there, then it wasn't going to go up in the first place in the way that you expected. So those are the two things to watch for Bitcoin, the two setups, potential ways to hedge either directional bias. If you're going to be entering into long trades, getting some long vol exposure, or entering, one can take both sides of the trade and just drop the winner off, but you're really betting on the significant breakout there. So that's going to be a slightly different strategy. Maybe you start off 50% long, 50% short, or 50% hedged, and then you just add to your hedge, or you subtract from your hedge based on metrics such as, is price breaking out, is price moving to the upside, et cetera, et cetera, et cetera. Do we have confirmation? Do we have follow through? What is my system saying? What are the indicators saying? All of these things. The other way of hedging that I've talked about, you obviously have you have options out there. If you don't have experience with options, I would do research before investigating into those. And the other options that you, of course, have are going to be getting some derivative exposure to Bitcoin volatility, because having long vol exposure is going to protect you regardless of which way the market moves. Now, typically, long vol exposure tends to skyrocket much more on short trades rather than long trades, which is why it is a better hedge to the long side. So if you are going to be putting on longs, getting long on Bitcoin volatility exposure, because then if price plummets, vol tends to move up much more than if price moves to the upside, regardless of momentum, and vol moves up considerably, but generally not as much as when price dumps quite a bit. All right, so we're not going to look at Ethereum, spend too much time on that. You can play it just like Bitcoin. I don't think anything is different about that. So let's move on and talk about probably the most, I don't know if the chart is necessarily so exciting, but certainly it's exciting to be in that market. Let's talk about silver. So for this, we're going to look at the CFD chart and pull open silver right here. We're going to get rid of these drawings, and we're going to look at this from a top-down perspective. So on the weekly, here with silver, let's zoom out here a little bit. So breaking resistance that we previously had up here at about $18, obviously last week, and having beautiful follow through on that. I didn't get much of a BPC opportunity here on the daily. Like price pretty much broke, pretty convincingly above the $18, $19 resistance, depending on what you want to call it. And then we've had just this beautiful follow through on this current week, particularly on today's daily candle. All right, so based on this, let's just zoom out. We'll start, as I said, from the top down, do this relatively quickly, and just mark out our roadmap for silver here. Thank you so much, Magnet Mode, for telling me that you're on. So let's mark out our market lows here. Yep. Previous resistance, resistance, support. Now support. Now resistance. Okay. And then, of course, we've got the top of the market up here at about $50, where the conservative long-term holders would be looking to be fully out of their bags at $50. All right, so break of this resistance level. We're going to measure this range. We could measure this as a rectangle bottom formation. So the way to do this is to get a measured move anyways, is not to measure from tops to bottoms. We're just going to be measuring from lower support to upper resistance. And then, of course, just kind of simply just clicking again and measuring from the area of the breakout. So a measured move is going to be taking us up to about almost where we're at. Maybe a few more, maybe next week we can actually get up there. But about 23.81. So let's mark that out. Sorry. 23.81. It's going to be yellow. And I do like where the bigger extension here is. Not that I'm a big fan of fibs, but that would be my target anyways, is the $26 range. And that's kind of putting us up at 26.80. I'd be conservative right under 26, which is actually right before we hit that resistance. 26.13 is actually where these lows are on the chart. So $26, I think, is fair. That makes a whole lot of sense to me. This area makes sense as a profit-taking target, about 23.86 for the short-term trade. We do have previous rejection and, of course, a lot of liquidity in that area. And a little bit of an order block here, kind of a stutter step order block. All right, so the weekly is quite bullish, breaking out of resistance, room to go to the upside. Let's look at the daily for trade entries. Based on that, all right, let's get zoomed in here. Again, big green, 3 soldiers, which I don't really like in this particular circumstance. The one thing here that does stand out to me is obviously the size of this volume spike. This is a massive volume spike. And as you guys know, volume enters into the beginning and end of trends, also on legitimate breakouts. And you can see this massive amount of volume petering, and then the trend beginning to proceed here on low volume, and then actually breaking out. So in my opinion, this is the way that I trade. This is not a good day to enter silver. Pullbacks should be longed with prejudice, but you do not enter on explosive green candles. It can work out for you. Obviously, we can see that we had a little bit of follow through here, but obviously, as you guys know, really the silver gains here are for those who have been holding silver for quite a while. I don't do short-term trading on these assets. I just swing trade these. So I do believe that pullbacks should be longed with prejudice. If we were going to get a rounded retest, that would put us down to about 1880. Consolidation there would be a very nice platform to consider this range done. And then we can look at more grandiose targets. But certainly, first target for me is going to be 2386 in the short term. I think we can reach that within the next few days if we continue. Or we're going to have a pullback to about $21 and then take it on the next leg. And then I think where we ultimately ride or get to as my current target is going to be the $26 area. When we get up into this order block, into this consolidation area, we'll reevaluate. And none of this is all for CFD trading. None of my silver I plan on selling at any price level below $40. So keep that in mind. All right, so we talked about silver. Let's actually go down. If you want to do short-term opportunities, let's go into the 4 hour and see what we got. All right, pretty sensitive here. All right, relatively sensitive. About to get a sell signal here. We do have some consolidation following this latest movement to the upside. We do see some sellers step in here, and then a kind of another spike of buying, unable to push us above this resistance. Consolidation here looks likely. Again, not the time to buy. Long pullbacks with prejudice. We can see that pretty clearly on the hourly as well. Long pullbacks with prejudice. This is a good pullback to long. I would be a little bit wary. You might get another opportunity here at 2150, maybe 22 for a short-term push opportunity. But more likely a little steeper, around 2090, maybe even lower. All right, so that's going to take silver for us. Let's look at the chat. Yeah, thanks, Jack, for pointing that out. You know, we are in communication with YouTube because they are, or excuse me, they have, over the past week or so, been not sending notifications to our subscribers and not allowing our show to go into feeds. So not even on the main page of Cracking Crypto on YouTube can you see that there's a live stream. This is a big issue. So if you guys could really help out, we appreciate it if you could leave a comment on today's show, just stating that the show is not showing up in your feed. If you guys really want to help us out, you guys can send a message to YouTube and tell them, hey, a channel that I subscribe to isn't showing up in my feeds. What's going on with this? I'll make a tweet about this because this is likely the only way that this is going to be resolved. I know that Jack spent a couple hours speaking with YouTube yesterday trying to get this issue resolved. So my estimation, my thought, my assumption here is that this is that YouTube's algo is being pretty non-discretionary, pretty discriminatory when it comes to cryptocurrency related content, particularly, and live streams in general. And that is because of the amount of live stream scams that are going on. These, you know, they're just all over YouTube right now, which really is ridiculous. You know, it's the fact that you can kind of not allow good content to go out, but you allow paid advertisements for scams is pretty rampant. So something is slightly broke here. So if you guys help us out, really appreciate the support, and we'll keep you updated. Again, watch Twitter. We'll put something out on Twitter here in a little bit. All right. This is usually where I take a cryptocurrency chart request. So if you guys have one, let me know, or I'll take another request. While we're waiting for that, let's see here. Wrong button. Here we go. There's the right button. All right, cool. While we're waiting for that, for a chart request to come in, I want to mention that today's show and all the shows are brought to you and made possible by the Premium Trading Group. The time and energy and availability of the staff, and for them to put all the effort into making the show and doing the graphics and making sure that everything works as it's supposed to, is thanks in large part to our subscribers. And there has never been a better time to join the group with the launch of the online academy, the refurbishing of the indicator suite, and the indicator suite works very, very well currently right now. But all of the things that we have in store, the next few months are going to be a real treat for members who are in the community, or excuse me, who are in our community, as well as kind of the all the topics that we're covering in the community mentoring sessions are really invaluable. So regardless of whether you guys are interested in cryptocurrency, Forex, derivatives, or ETFs, we're really working on expanding and providing those bases to our subscribers. Again, we certainly have you covered. So premium indicator suite, premium signal service, community mentoring, personal one-on-one mentoring for the subsequent tiers, looking for the right word there, as well as the online trading academy, where we are going to eventually host all of our educational content. Currently, we still have the educational content, the gigabytes of it, like over 100 gigabytes, in the format that it currently exists. So that is all available. So you guys can find more information at premium.crackingcryptocurrency.com. The banner's up there. The link is in the description down below. Love to see you guys in our community. It really is. I mean, it's probably the best thing. It's been the best. I talk very, very commonly about what a positive effect the trading group has in my life, being around like-minded individuals, having the opportunity to share my knowledge, share my experience, and just see people come in and nail it. It's a really good feeling. All right, so we've got some requests coming in. Let's take a gander here. Crypto Caveman with Cardano USD. Let's look at Cardano. Let's talk about DOC. I had signaled DOC for the premium signal group last night. Didn't reach the limit entry if one was aggressive, and I pointed out the justification for the entry. If one was aggressive with this entry, congratulations. This did reach both of the posted take profits, but you would have to be aggressive with the market entry on this one. So we will get the next pullback. So let's replace this chart and look at Cardano USD. Let's look at this on Kraken. Yeah, good price history on Kraken. Oh, excuse me, that's of course there is. Weekly. Where can we get long? Yeah, it was on Binance longer. So we go back to, maybe not. We go back to December 2017. And with Kraken, we're going to go back to, 18. So let's use Binance. All right, this is going to be about the best that we can get. All right, we're going to have to zoom in here because of resolution. It's been a while since I've charted Cardano. So let's do this. And we'll just, in the arms of the angels right there. If Cardano can hit $1.40, then there's going to be good times. But for the most part, somebody bought it at $1.40, guys. So remember, in the arms of the angels. All right. Get rid of that. All right. So just overall thoughts looking at this chart. Cardano has been trading in a range between 9 cents and 2 cents for almost 2 years. Continually getting rejected from the 9-cent area, trying to get up into that 10-cent range, hitting it briefly just for a few moments in time. Now, we have actually finally broken out of that range. We've got I would call this, I really wouldn't call this anything, but somewhat of a double bottom formation on a longer term time frame. Call this a double Eve pattern. So again, if we're just looking for the simplest possible way to do this, measuring from the, this one is actually a lower low. So measuring from the lowest low to the highest high in this range, and then measure from the breakout point, which would be right there. All right, so if we can get lucky, come on now. Let's talk alt season here. And I'm not a big fan of Cardano. Keep that in mind, right? I am not a big fan of Cardano. I do not think it is I don't think it's an Ethereum killer. Just put it that way. All right, anyways. So if this thing does make the measured move of this bottoming formation, whether we want to call it a double E formation or whether we want to call it a rectangle top, or excuse me, a rectangle bottom. If it was a rectangle bottom, we'd have to be a little bit more conservative. But this lines up pretty well with some profit targets here. So about 14 cents, 19 cents. They're a little bit higher than that, as you can see, but just being conservative. And again, let's look at, come on now, stop doing that. There we go. We can kind of see the reason for this. Let's get more of the chart in here. There we go. Okay. We can see the reasoning for this again. We have resistance, which we currently just bounced off of at about 12.89 cents, right? So about 13 cents, a little bit under 13 cents. You can say 13 cents because we did actually trade up to 13 cents. But currently rejecting from that on the weekly, 2 pullback weeklies. This actually looks relatively good. Not a massive sell-off of this bullish uptrend. This is likely to continue and push through, actually, just looking at this chart, unless sell-side volume comes in. But the next area to break above is 13. We can consolidate and range here for quite a while. But if the market continues with risk on sentiment, then I would say 14 and 19 cents would be the next stops for Cardano. Then we get into this kind of big no man's land where there's really nothing between 20 cents and 40 cents. So long-term hodlers can hodl for the long-term position. Most likely we'll establish a trading range up here. That would be very good. That would be the best possible thing for altcoin markets. If we bought, like, let's say we bottom off these, we rally off these bottoms and we move up, 200-300%, and we get into ranges that we were previously trading in 2017, 2018. Not highs, but ranges, like this range right here for Cardano. If we reestablish this range, that would be a game changer for me as far as my portfolio and moving into things, because that would be a big shift in sentiment. That'd be a big shift in behavior for the altcoin marketplace. Because as long as they kind of remain at their lows and continue to get rejected from the same area, you can make the case that, look, man, these things are never going to really rally that way again. And this is penny stock land forever. All right, so what the weekly looks like. On the daily, sideways consolidation. We seem to have supported about 11.75 cents and resistance around 13.26 cents. So just allow this to play out. I think I don't really like this, but certainly the second test of the second test of support can give you a range-bound trade up to about 12, maybe even 13 cents. So that is on the table. Watch that breakdown of about 11 cents, and then kind of watch for a retest. Probably not all the way down to 9.5 cents. Maybe a little bit higher than that. Maybe about 10.5 cents would be a good area to watch for pullbacks. But again, you want to see that volume spike. You want to see some bottoming behavior on like the 4 hour is going to be a good way to do it. Or again, you can use a PTP system, which is what I would recommend, and watch for that continuation signal. We would certainly be getting exiting signals or fail safes based on this if we're not in trailing stop territory, depending on how one system performed throughout this continuation. But essentially, we can see this long consolidation period here. We do get a wick down to previous support, so maybe we could look for a scenario like that, long consolidation period, wick down to about support, and I would say not 9.5. I'd probably say 10.5, and then continuation of the uptrend. So this is the area to re-enter into the trend when the trend actually resumes. Get a nice candle body breakout on good volume above the range, good signal, and you're able to catch all of this. I don't really think there's any reason to be in the market right now. All right, Forex. We already covered the Forex charts that I really wanted to look at here. Precious metals. We already covered silver. We'll look at gold tomorrow. And indices. Okay, so unless nothing has drastically changed. Let's take a look here. And I talked last night. I put out a good tutorial on how you can watch the overnight dollar swap markets to kind of get a good inkling of whether investor sentiment is risk on or risk off. To kind of know how the ES is going to open up, and by correlation, Bitcoin. So let's look at the ES right now. And again, so looking relatively good, approaching resistance on lowered volume. This does look like we are going to get a breakout in the ES futures here on the daily, which we're currently in the process of. So again, basically the fourth straight bullish day in a row, following just a little bit of a baby pullback here on a breakout candle. So things relatively looking good for investor sentiment, which is good for my USO trade, good for my SPX trade, which is good for almost all the risk on that I have in the market. So Bitcoin, or excuse me, crypto is really the only thing where, the majors, Bitcoin is really the only thing where I'm contrary here. All right. We're going to get into today's crypto currently segment. Before we do that, you guys want to trade along with us? We do a majority of our trading on ByBit because I like my deposits to be safe and secure. I like the interface. I'm not going to talk too much about it, but we're going to play this very amusing video and see how Jason's experience is doing with ByBit. We'll come back. We'll do the crypto currently. We'll do the crypto currently segment. We're going to be talking about Robinhood quite a bit today, so stay tuned, guys.
Can't catch a break over on BitMEX with all the wicks? Try a better alternative at ByBit.crackingcryptocurrency.com and rest easy for a change.
All right. Whew. Yeah, we can turn that light off. There we go. All right, so we're going to be talking about Robinhood. So Robinhood, obviously for those of you who have been living under a bridge, Silicon Valley-based stock and cryptocurrency investing apps, very, very popular among younger retail traders. And that's because it's got a fairly slick and user-friendly interface along with zero-fee trading. But Robinhood appears to be scrapping its UK launch and scaling back its plans of global expansion, right? No Empire theme song here for Robinhood. Now, an email went out to about 250,000 UK-based users that were on the waiting list. They've been signed up since early last year when Robinhood first acquired a broker's license from Britain's Financial Conduct Authority, the FCA, in April 2019, which would grant them the ability to launch their product in the UK. We've previously talked about the FCA with a regulation on margin trading as it applies to cryptocurrency. Now, in that email, Robinhood wrote to these disappointed Brits that, quote, "A lot has changed in the world over the past few months, and we've made the difficult decision to postpone our UK launch indefinitely," end quote. They have decided to invest all of their funds with Goldman Sachs to manipulate the US election instead. That was not in the email, but maybe I was the only one who was CC'd on it. Now, the email went on to state that Robinhood will be closing the waiting list, not just postponing, but closing the waiting list and shuttering their official UK website shortly. So that's dead in the water. Like, that's gone. That's not postponed. That's done. The Robinhood app has been on somewhat of a breakaway success. I've watched this over the last 3 years. The app managing to attract even more users to join and trade amid the pandemic, amid the market crash. But the speculation is rampant now that consumer protection concerns are at the heart of why they have now pulled back dramatically on their plans for global expansion into new markets. I'm going to highlight this. Thank you so much. Look at this New York Times article, bastion of truth and solidarity in the United States. But stories like this piece from the New York Times highlights how retail traders, can very easily log on to the platform and proceed to make complex trades. But most of them, of course, are going to lack an understanding about what products they're trading, what processes they're doing. And this often puts new traders and customers, Robinhood's customers, at risk of losing far more than they bargained for, which was illustrated, of course, by the recent tragic suicide of a 20-year-old college student from Illinois. Despite that, popularity has surged in recent months on the back of the global lockdown, with stimulus checks sprinkling money around as startup capital to aspiring traders, and budding traders have flocked to the platform to the tune of 3 million new users in the first quarter of 2020 alone. And the data suggests that it's been mostly millennials joining the platform. Now, in June, Robinhood found itself in hot water when the aforementioned Alexander Keynes of Illinois found himself underwater to the tune of $730,000. And this was due to trading put options, right? So selling naked puts. And although Robinhood has refused to comment on the specifics of that particular situation, it is very likely that figure did not represent uncollateralized indebtedness at all. Instead, it was a temporary balance until the stocks underlying his assigned options actually settled into his account. But unfortunately, because we're talking about individuals that do not have an understanding of the markets, that do not understand how P&L works or how these contracts and options, which are contracts, are calculated and work, this tragedy forced Robinhood to make major changes to its platform, particularly when it comes to their options trading. Because many new traders were getting themselves into a lot of trouble by putting on positions into complex investment products that they have no formal training in. Options are not easy. They're not simple. Now, one reason we're highlighting this story today is because education is something that we take very seriously here at Cracking Cryptocurrency. As we recognize how many pitfalls await new traders just entering the space for the first time, many of us in the community have started at the bottom and made costly mistakes or approached markets that leave us feeling burnt out. And so it's very important to point out how apps like Robinhood, while they may be very convenient and engaging to use, can get inexperienced traders into a lot of trouble. And there's no difference in cryptocurrency either. Now, one such trader highlighted in this New York Times piece is Richard Dobatz. He's a Navy medic from San Diego. He was in his late 20s when he dived headfirst into Robinhood in late 2017, obviously attracted by how easy it was to buy and sell stocks, and seemingly, as I said, for free, zero commission. Now, describing in his story how the one-click trading, how the features like falling confetti alerts and emoji-filled notifications made it feel like a mobile game just straight out of the App Store, like you're playing Candy Crush. This is what mobile trading can do. This is why I'm kind of against the concept. Now, as unbelievable and irresponsible as it may sound, he funded his Robinhood account with $15,000 utilizing credit card cash advances. And he began cranking up how much time he spent on the app, putting more time in front of the terminal, which of course means you're going to be taking trades more often. And of course, inevitably, after a little bit of initial success, he ran into a string of losing trades. When that happened, instead of admitting he was wrong and figuring out some way to pay off his debt and get back to status, he borrowed against his home, using the value of his home as an equity line of credit to the tune of $60,000 in order to buy and sell even more speculative assets and options, hoping to dig his way out of a financial hole. Over the next 2 years, he rode the Trump-fueled stock market euphoria to new highs, and his account balance did eventually swell to over $1 million. Success story, if ever there was one. But once turbulence hit the markets in the wake of the COVID meltdown, Richard was left unprepared. His account was nearly wiped out, right? This article says his balance today shows just under $7,000, which is a significant amount less than the principal that he owes in the first place. And his wife, likely on the verge of divorce. She told the New York Times that he wouldn't eat when he was deep into trading at night. He couldn't sleep. And when he did, the stress would give him nightmares. Now, part of Robinhood's success is in appealing to a younger generation of aspiring American traders. And that's thanks in large part to the Silicon Valley playbook of behavioral nudges and push notifications via the mobile app. And this has drawn inexperienced traders into the riskiest assets available. And an analysis of industry data shows that Robinhood users traded the riskiest products at the fastest pace than any other retail brokerage firm. That data went on to show that in the first quarter of 2020, Robinhood users traded 9 times as many shares as E-Trade customers, 40 times as many shares as Charles Schwab customers. Shout out to Charles Schwab. Robinhood traders also bought and sold 88 times as many risky options contracts as Schwab customers. Shout out to Schwab options. Now, again, that data went on again to show that trading by small investors usually results, but this is known to most individuals, usually results in poorer returns and greater losses, and smaller retail investors fare even worse when they get involved in options. This article dives into Robinhood's system failures and service outages. We've covered those before as well, and those seem to occur unusually often. Insiders at the company told the New York Times that they felt Robinhood was not doing enough to support customers or provide adequate guardrails at times of system trouble. Like the young Illinois man whose life ended tragically after his stint on Robinhood, the average customer of Robinhood is young, just 31 years old, and half of their customer base has never traded before joining the platform. So, in other words, babes to the slaughter or sheep to the shearing. Now, employees of Robinhood revealed to the New York Times that some customers were so disgruntled they even traveled to Robinhood's California headquarters in order to air their grievances directly to the company. Now, the company has since grown concerned enough that apparently they've even installed bulletproof glass at the front entrance and stepped up security, which is always a good sign that your consumer base is happy with what you're doing as a product provider. Now, at the heart of Robinhood's business model is an incentive to encourage more trading. Even though Robinhood doesn't charge trading fees, it still earns more if their customers trade. And that's because they generate revenue through a fairly complex practice known as, quote, payment for order flow, end quote, right? So each time a Robinhood customer trades, Wall Street firms actually buy or sell the shares and determine what price the customer gets. They act as the broker-dealer in this sort of pseudo ETN system, right? Those firms pay Robinhood for the right to do this because they then engage in a form of arbitrage by attempting to buy or sell the stock for a profit over what they gave the Robinhood customer. So they're taking advantage of your order flow, utilizing high-frequency trading, utilizing the mass of their orders or their overall position sizing, and scraping pennies. They're scalping. This is how the professional firms do this. It's not a new practice. Retail brokerages like E-Trade and Schwab operate like this too, but Robinhood is making significantly more than those other established retail brokers do for each stock and options contract that they send through the professional trading firms. And just how bad are Robinhood customers getting fleeced? Well, these next figures might shock you. And I've never had the opportunity to say that on a live stream, but yeah, this might shock you. So data shows in Q1, let me see if I can pull this up. Total payments. Yeah, so there's total payments. We'll just go with this, right? All right. So in Q1 of 2020, for each share traded by retail customers, Robinhood made 4 to 15 times more than Charles Schwab, brokering the same deal. That means for every dollar in the average customer's account, Schwab made about $195 from trading firms, while Robinhood made $18,955. Now, this is likely because professional trading firms believe they can score significantly easier profits from the trades Robinhood customers are putting on compared to the more sophisticated retail traders that are on platforms like E-Trade or Schwab, particularly Schwab. Shout out to Schwab. So these are all things that new traders need to keep in mind. Must keep this in mind. And it highlights the importance of education and a professional approach, because whether you're in cryptocurrency or traditional markets, it is a whirlpool of sharks out there. And having a professional approach with a serious risk management strategy, these are critical to new traders approaching the space casually or otherwise. Of course, these are the things that we focus on that are the mainstay of our educational content at Cracking Cryptocurrency. Obviously, the concepts, strategies that are in the Pathways to Profit course. And again, the first thing that individuals hear when they walk through the door is risk management and emotional discipline and systems trading, right? Trading with a system, knowing exactly what you're doing, and educating yourself. I recently began trading on FTX, and I spoke about that. The first thing that I did was I exhausted reading all of their documentation. Whenever I put money somewhere, I want to make sure that I have read all of the fine print and I know exactly how the system operates. That's often how you can find an edge, and it's how you can prevent yourself from being on the wrong side of a significantly bad movement. So, as always, trade safely. Leave your comments down in the comments section down below. Thank you guys so much for joining me for today's Cryptocurrency segment. All right. Now, before we leave today, let's see here. All right. Hey, speaking of privacy, like we were talking about privacy, if you guys care about cryptocurrency and privacy, make sure to check out our partners over at Spectre Security Coin. They're working to put the power of data back in your hands. You can join their community, take advantage of all of their products and services, including what I would recommend, a one-on-one private consultation to boost your online security. A link's in the description, but you can visit Spectre, SPECTRE.crackingcryptocurrency.com to view all their products, services, and to download their wallet app for free and utilize their public blockchain. You can use the coupon code. By the way, use coupon code GETCRACKING at checkout to get a 10% discount on anything you want to purchase there. That's GETCRACKING. Gotta get pop-ups on the screen because it's certainly easier if I show you guys what we're talking about. Now, also on the heels of that, Webull is the mobile broker that I do like to utilize and that I would recommend over Robinhood at this point in time. It is a little bit newer, but I have noticed their customer service is more significant. They haven't had the outages. They do have a web platform as well that you can utilize. Again, the broker that I like the most is certainly Charles Schwab, but if you guys do want to take advantage of something that's a better alternative to Webull, than Robinhood, I would recommend Webull. If you sign up to Webull, you do get 2 free stocks all the time. Those are just kind of a nice initial entry, get your feet in the water. But again, as with all things, like trade safely, investigate what you're doing, investigate the platforms, the contracts that you're trading. There's a link down in the description that will give you those 2 free stocks, webull.crackingcryptocurrency.com. Free to download, same thing, 0 commission fees. But that's good if you want to just get your feet wet, do some demo trading, do some initial paper trading, which you can do on Webull, right? So that's good. Robinhood, you can't paper trade. Webull, you can paper trade. So it's probably one of the best benefits. You can do it conveniently from your mobile phone, which is nice when you're learning. But when you're ready to get serious, I recommend signing up for a platform broker like Charles Schwab. Interactive Brokers is obviously very popular, but I got big problems with them. All right, so let's take a look at, we don't have too much time. We have a community mentoring session here in just a little bit, but let's take a look at any questions that you guys might have submitted, and I'll do my best to answer them. Damian Hughes says, either position size or get wrecked. There is no in between. Yeah, in the long term, in the long run. Yes, that is correct. GBU says, was this article about bring it around? Zero commission equals big spread. Yeah. Started at the bottom. Now we're here with CC. T-Dub, thank you so much for joining us, man. I'm probably not going to do any chart requests before I leave. I did do 80 USD tomorrow, and I'm sorry that the show didn't show up in your feed, but we can try and check out Kava tomorrow. DeFi coin moving along nicely, and I am bullish on Kyber Network as well. All right. Oh, I see. I see it now. GBU Wally with a great point here. Problem with stream chat is that one, can't verify what you say, and both good and bad statements are potential FUD. Use Discord for serious discussion. Yeah, make sure you guys are in the Discord. That's the best way to talk. Apparently, there's this long conversation with an individual talking about strats. If Cardano hits $1.40, I am moving to an island. Coming with you, man. Bring It Around says, man, I follow your strats for... Okay, so here we go. Man, I follow your strats for over a year now, and I'm down about $145,000. What am I doing wrong? I mean, probably everything at that point in time. Probably everything. If you're down $145,000, you're going to have to ask yourself, at what point do you ask for help? At what point do you come forward publicly? At what point do you stop trading? At what point do you revise what you're doing? I don't see a super chat. Oh, here we go. GB Wally for the $5 super chat. Thank you so much, man. He says, plus, where else will you get movie night with the cryptocurrency community? Yeah, I mean, where else are you going to get movie night? Jack does a fantastic job with movie night every Saturday night, so make sure to join us in the Discord for movie night. Pop some popcorn, substances, but individuals are going to be having some drinks and just breaking down the week. Good times. Thank you so much, man, for the support. Shout out to you and Gunbot University and Gunbot as well. Hopefully you're doing well today. All right. I think that takes care of most of the questions. I don't get the money if I don't read it out loud. I mean, yeah, that's okay. At the end of the day, and I talk about this all the time, your success is yours, your failure is yours. So, if you watch a YouTube video that says, hey, this is how you can trade the OBV and multiple 3-screen strategy breakout system. This is the 3-bar play. This is how you trade a triangle. And that's the only thing that you do and you lose money. That's because that's probably not a good strategy or you're doing something wrong. My problem with your strats is that I'm literally not following your strats. That's probably true. Okay. Upcoming events today, the community mentoring session here in about an hour. The premium onboarding module is going to be going live probably at the end of the week. Wanted to show you guys this before we leave as well. So on the website, you'll see this new addition to the header menu, the Academy. So you guys can read about our online trading academy. We do currently have 2 courses up right now, Pathways to Profit, and the coming soon, the premium member onboarding. So over the next few months, this is going to get just really populated with all the content that we currently have on Google Drive. So of course, we already have our Risk Management 101 and 201, Emotional Discipline, Investment Psychology, Strategy Building in Pine, but just transcribing that and putting it into a format for this online learning system for the Academy it's a process. It takes quite a lot of time. All right, so with that being said, let's slide over here. Pop up the socials. You guys can follow us on any of these platforms if you like. This is where you can stay tuned, get attention. But of course, the best place to follow us is going to be Discord here on YouTube as well. Make sure to hit the subscribe button and leave a like on today's video if you enjoyed the content. CrackingCryptocurrency.com if you want to find out more about our services or what we do. And again, as I said, the Discord link in the description down below. Let's go to the outro, guys. All right. Well, thank you guys so much for joining me for another episode of Breaking Bitcoin Market Update. I hope you guys have a fantastic day. Take what I said today, think about it. This was a good episode. I talked about a lot of stuff that's personal and I think, important and impactful. And remember, usual stuff, usual ceremonies at the end of the day. Risk management and emotional discipline are what consistently pay the bills month after month here at my household. And it's not going to be any different for any other trader who looks to make his active income or his passive income from investing or trading activities. Stick to your guns, believe in your analysis, and trade your system. And that's really it. Build your system. Put the work into building your system, and then trading it becomes effortless. And always, again, we talked about the story, the really unfortunate story of that individual taking his life, looking at that unrealized P&L. Trading can consume your life. It's very easy to get sucked into the charts, particularly with just the way that our brains are wired as Homo sapiens. So you need to have the forethought. You need to have the structure. You need to sit down and plan out your trading activities beforehand so that listen, guys, your initial thoughts, your reactionary nature, your impulsive nature, your biology is generally not very good for you in today's society with what we have access to, with what we're able to do with technology. That requires you to be smarter, to use your brain and develop a plan, a strategy, a structure. You have to think it out. You have to plan it out. You have to write it out. Put it on a piece of paper and follow that structure, follow that system, follow that strategy. And you can be more successful than reacting, just being blown around like an inert piece of matter, reacting to everything. Jerry, I didn't see you standing there. How long were you listening? All right, guys. As always, we'll be back tomorrow at 12 p.m. Central Standard Time for another episode of Breaking Bitcoin. Comments down below, and I look forward to seeing you guys in the Discord. Trade safely. Be good, guys.